Hello students, we are still busy with IAS 33 earnings per share, and this is a nice question pertaining to the headline earnings per share. So you will remember that headline earnings per share requires that there are a number of items that should basically be excluded from the earnings per share or headline earnings per share calculation. And normally this is listed and then you need to go and remove it together with its tax element. So let's read together. The following is an extract from the Statement of Comprehensive Income for Billy Limited Group. Then there's a profit before tax. They've given us the income tax expense, and then there was a profit for the year amounting to 427,750. We have a number of additional notes, and in the first note they say, on 1 July 2006, which is at the beginning of the year, the entity had 600,000 ordinary shares. On 1 January 2007, the company issued another 100,000 ordinary shares at fair value. On 1 March 2007, the entity entered into a rights issue where one ordinary share was issued for every 20 shares held. The fair value per ordinary share was 10 Rand. On 1 March, the rights issue was undertaken at 5 Rand per share. In note number 3, they say profit before tax includes the following: a bad debt or credit loss of 80,000. So now we need to go and decide, are these items excluded or included? And bad debts are included, so we are not going to add it back because it should not be removed. Then we have gain on sale of plant for an amount of 60,000 Rand before tax. They tell you that the original cost price of the asset was 250,000. There was a carrying value of 180,000, and of course a tax carrying value, aka a tax base of 160,000. And the proceeds on the disposal and the proceeds of this disposal was 240,000. So this is a gain on sale. Definitely this is on the exclusion list, so it needs to be excluded. So the amounts that we should pay attention to for headline earnings per share, I am just going to highlight. Those that we should not pay attention to, I will not highlight. Then we have cost of restructuring operations. This is not one of the items that need to be excluded, so I'm going to ignore it. Then I have an impairment loss on Goodwill. That is indeed an amount that needs to be excluded, and it's worth 50,000, so I'm going to highlight it. We have pension fund costs relating to the activities of the group. This is not an amount that needs to be excluded, so I'm going to ignore. And then lastly, we have gain on the remeasurement of investment property. So this is a fair value adjustment gain. And of course, this is one of the items that need to be removed. So you need to be very aware that a list of items, when you have to calculate headline earnings per share, a list of items will be given to you. And now you need to go and decide, this one needs to be removed, this one doesn't matter, this one will be removed, this one is not on the list. So you need to go through it. So you need to make sure that you know the list that should be excluded very, very well, as in the slides. Then they tell us that the tax rate is 30% and that a preference dividend of 50,000 Rand was declared on 30 June 2007. In the required part, you need to calculate the weighted average number of shares for the year ended 30 June 2007. And you also need to calculate the headline earnings per share as at 30 June 2007. So the first thing we need to do is we need to go and calculate what is known as the VARNOS. So let's go and explore that. I've set up my Excel spreadsheet so long, and we're going to start with the opening number of shares. And if I look at the opening balance of the shares, they tell us that in the first note, there were 600,000 shares at the beginning of the year. Then I believe there's an issuance of shares, and the issuance is at fair value. So I just want to go back to the question. We have an issuance of 100,000 shares on 1 January at fair value. So now we need to go and count. It was 1 January, so we're going to count January, February, March, April, May, and June. So it's 6 months, so we're going to have to apportion it. 100,000 shares for 6 months, and that should give us 50,000 shares to be included in our weighted average number of shares. Right, the last component that will affect our weighted average number of shares is the rights issue. So we have a rights issue, 1 ordinary share for every 20 shares held on 1 March 2007. So how do we do this, the calculation? We need to go and apply the 3 steps for rights issues. Right, so step 1, again, I'm just going to write it this side. Step 1 of the rights issue is that we need to go and calculate the average value per share. And for this, we have an old set of shares, and we have new shares which are issued during this rights issue. So if I look at my rollover total, I'm just going to write it in bold. It should be 650,000 immediately before the rights issue. So the old shares will be 650,000 shares. Then we have new shares that need to be issued. And in the question, we are told that we get 1 share for every 20 shares that will be held. So it's going to be then the 650,000 divided by 20 times 1. That's 32,500. Then the fair value of the shares will apply to the old shares, while the rights issue value will apply to the new shares. So I believe it was 10 Rand for the fair value, but 5 Rand for the rights issue. And then we can go and calculate the total Rand value, which will be the old shares times their fair value, and then the new shares times their rights issue value. If I add everything together, I can then go and calculate my average. So I'm first adding up all the shares, which is old plus new. Then I'm adding up the Rand value of the shares, which is 6.5 million plus the 162,500. And now here I can go and calculate the average value per share. So it's going to be this Rand total divided by the total number of shares. And I'm just rounding it to 2 decimals as the question instructs. It says Rand values 2 decimals. If we work with shares, please round it to the nearest whole share. Right, so that's step 1. In step 2, we need to go and calculate our fair value shares. And we do that by taking the new shares Rand value, and we divide it by the answer of step 1. If I look at this, we have a new Rand value 162,500, and our answer 162,500, and our answer was 9.76. And how many shares does that result in? It results in, I'm going to round it, it's 16649.6, so it's 50. Right, so it's 16650. Then we can move on to step 3. So there's my answer. Step 3 is to calculate the bonus element. And here we're simply going to take the new shares minus step 2's answer. So the new number of shares was 32,500. And we need to minus from that 16,650. And that gives me an answer of 15,850. Right, so now that we've calculated all our steps and all our answers to the steps, we can go and proceed to calculate the rights issue. So the first thing I'm going to do is just show the bonus. And for the current year, we just use the bonus element as we've calculated it. And I'm just going to copy it in there. Then we have the fair value, the rights issue, the fair value shares. And here we need to take our fair value shares, which was the 16,650, 650, and we need to times it by the number of months. So this was done when? 1 March, so it's March, April, May, June. 4 months. And now I can get to my closing balance for my weighted average number of shares, which is my rollover total, adding the bonus and the fair value shares from the rights issue. And there we have our weighted average number of shares. And you've answered the required part as it relates to number A. Right, for number B, we have to go and do the calculation for headline earnings per share. And for headline earnings per share, we need to start with basic earnings. So basic earnings would be my profit after tax, and I minus, then, to see if I can get, there we go. We minus the preference dividend. If I look at the profit for the year, it was 427,750, and I'm going to minus from that the preference dividend mentioned in the last note, which was 50,000, and that's our basic earnings. From this point forward, we now need to go and adjust the earnings with all the different elements that need to be excluded. So the first one that I saw there was the gain on plant. And for gain on plant, that was a total of 60,000. And the tax rate is 30%, so we will have a remaining 70%. And the gain was previously added, so now if you want to eliminate it, it needs to be deducted. So we're going to say equals minus 60,000 at 70%. Right, so students may ask, if I can just go back to the question, that whether the deferred tax will not have an effect. And the answer is no, deferred tax will not have an effect if you have a sale, a gain on sale, or a loss on sale. Because the information given might lead you to think that you need to go and calculate the components of income tax, right? So just to make sure that we're on the same page, I want to demonstrate to you that you will still get to the same answer. So if we think about income tax, right, it has two components. So for the income tax, we have, on the one side, we have current tax. I'm just going to call it current. And then we have the deferred tax element. All right. So for the current tax element in this question, we were to be taxed because we are now busy with SARS's point of view. For the current tax, we would be taxed on the difference between the proceeds and the carry value for SARS. So the proceeds was 240,000 and the tax base was given as 160,000. So you would assume then that for current tax, they are going to tax you on a total of 80,000, which is the difference there, right? So if I now say that 80,000 times, because of course this is a gain, right? This is a recoupment. So for current tax, for the current tax portion, I would say it's then 80,000 times the 30%. And that would to give me a tax payable because this is a recoupment, it's a gain, so you're going to pay tax on it, and that should be 24,000. Right, then you will also have a deferred tax implement or an element, a deferred tax calculation. So for the deferred tax, I just want to open another pane. For the deferred tax, we normally have accounting and we have tax, right? And then for the accounting portion, we had a 60,000 Rand gain. For tax, we just said it was an 80,000 Rand gain, aka recoupment. So the difference here is tax minus accounting. So the difference is 20,000 and it's positive. So 20,000 at 30% would to give us 6,000. So for deferred tax, it's going to create a positive effect. So it's a tax asset, a positive 6,000, right? So for deferred tax, if we have for deferred tax a positive movement of 6,000, because it looks like that, right? Then in the income tax, we have a credit 6,000, and of course that's a minus in the income tax. So going back to my calculation then for deferred tax, the movement is then the deferred tax component of the income tax is then minus 6,000. And then the net effect here to get to income tax, 24 minus 6 is 18,000. Now we're going to say, thus the effect is going to be, I'm just going to write it here, the 60,000 gain that needs to be added back. So it's going to be minus, and then we're going to add to that the 18,000 Rand tax that we just calculated. And that will also give you minus 42,000. And that's the same as the calculation that I've done there. So this was just a very long way of explaining that it doesn't matter if the tax base and the accounting figures differ. If you have a gain or a loss on disposal, you will always get the same between your current tax and deferred tax component. You will always get the same answer as simply saying the gain times 70%, which is the remaining percentage after the tax is deducted. Right, moving along to the next one, there's an impairment loss on the goodwill. And that was an amount of 50,000 at 70%. So previously it was a loss, so now we want to cancel it out, so we need to add it as a positive amount. So that's then 50,000 at 70%. The last item that we have there is our fair value adjustment, and it's a gain. So we need, it was added previously, now we need to minus it. So when you do your headline earnings calculation, you do the opposite of what you've done previously. So for the gain, it was 10,000, so it's 10,000 at 70%. And previously it was a gain, so now we're going to deduct it because we would have added it in calculating our profits. And now we can get to headline earnings. Right, then we take our weighted average number of shares. And we can get to headline earnings per share. Which is then the headline earnings divided by the weighted average number of shares. And because it's a rand value, it's rounded to 2 decimal places. And that gives us then 0.54 Rand of headline earnings per share. All right, so this was quite an interesting question as well. I really liked this headline earnings question, and I will then see you in our next question relating to IAS 33.